took almost 10 days to get there.
Yeah, registered mail. Okay, so just for the training in the video, I just want to go over that, and we'll go on and about plans of action and so forth for you, or for people that would be in your situation. But when you do, like, what happens is you're the trustee and the surety for this trust, the John H. Doe name, and there is records in their system of, taxpayer obligations for whatever years that either weren't paid or weren't filed, or a combination thereof. Different people have different situations. Some people filed but they didn't pay. Some people didn't file and didn't pay for 1 year, multiple years, whatever, whether it's for their individual, for a trust, or for a corporation, or for any type of entity. So if we're talking here, in your case, talking about an individual U.S. citizen, so or individual taxpayer, which fills out a 1040. So unless you rebut the presumptions and show, and go through a more intensive process of possibly having a claim that you don't owe any taxes, which is kind of difficult to do and so forth, what you and others have done is, sent in a bond with a settlement, with a set-off, notice to set off, forgive me request regarding a statement of account, and seeing if they will accept that and if that's sufficient. And according to HJR 192, people assert that, they have to accept it, and I have seen it be accepted and it work numerous times. But the problem is when people are being contacted by the IRS, you haven't filed, here's the amount you owe, or if they haven't assessed an amount, they're moving forward and they're doing an administrative process. So we can learn a lot about the way that they move forward and enforce their claim, again, without taking you to court. That's why we call it a private administrative process. If they were to take you to court and sue you, to get a judgment for the money, or to have an order to compel you to, fill out your tax form and, pay it or whatever, that would be a public proceeding. So the IRS, we can learn a lot from the IRS and how they do private administrative processes. And they contact us, they give us years before they actually go and then put a lien or a levy. And there are many interesting ways that we'll go over in this recording of ways to deal with that. But first, I want to do an all-comprehensive, overview. So the IRS or other taxing agencies, if you don't respond, they're going to assume that, well, if you haven't filed and you haven't paid, and they send you notices to do so, and they have their own records and proof that they mailed it from, multiple offices, which they usually do. They usually send from, Ogden and Austin and this and that and Kansas City, all different places, and you get 3 notices from multiple different. It's like, why do they do that? They do that because it reduces or eliminates their liability. The IRS is a private trust, which is a third-party debt collector for the International Monetary Fund, actually, and who the U.S. Treasury owes the debt to, the world bankers and so forth. So anyways, they still, in what they're doing, there's a very high liability in levying people's bank accounts, putting liens on people's, situations. I mean, people in this, commerce, sovereignty, whatever you want to call it, like movements that study this stuff, like a lot of people get in trouble for putting liens without proper lawful right to do so, or it gets challenged. And sometimes they are proper and it gets challenged, and sometimes they're not proper, and people can even get charged with felonies for filing false liens, fraudulent documents to the county recorder, different things like that. Obviously, it goes without saying, if you levied someone's bank account unlawfully as well, you'd be in the same situation. So it's a very high liability business to be putting liens and levies and collecting debts. So third-party debt collector companies, typically have multi-millions of dollars of, indemnity insurance. So if someone brings a claim against them, from, what they do. Same thing with finance companies. towing companies that are hired by the finance companies to repossess people's cars and stuff, they've got to have indemnity insurance. What if the car was repossessed unlawfully and you needed it in order to get to your wedding, or you were the best man at someone's wedding and you missed it because you didn't have your car, and now the whole wedding was ruined? Yeah, you might be able to develop a $2-4 million claim. I didn't show up at my best friend's wedding and I missed giving him the ring, and everybody flew in there from all around the world to witness the wedding, and the ring was, the best man with the ring wasn't even there, and had to delay it, and like people flew in from all around the world, and you know how expensive weddings are? So that's just one example of how much liability it is to do debt collection and enforcement, repossessing people's cars. You can leave them with no car. They won't be able to get to their job. And then what happens if they don't get to their job and they get fired from a position that pays them $30,000, $50,000, $75,000, $100,000 a year, whatever, and they had job security and they had benefits and they have children to support, and now you pulled the rug out from underneath them because if you can prove that they unlawfully repossessed your car and you got fired from your job, or you missed your best friend's wedding, or you missed your own wedding, or you missed a funeral, wow, you've got a freaking lawsuit for millions. You understand that? So the IRS has to make sure it's protecting itself and getting more than sufficient evidence, and that's why when we do our administrative processes, we are so, the other trainers out there, Brandon, and all those, the recordings that go step by step over the administrative process, it's all about keeping all your records, making sure you got everything, your T's crossed, your I's dotted, and you've given the other party multiple opportunities to respond. You got your whole process is being mailed through a third-party witness who's willing to sign an affidavit saying, hey, I never got a response. Hey, I have these records. Hey, we have proof of delivery. Hey, I mailed this. We didn't get a response. I did deliver this. We also sent another package, a notice of fault, opportunity to cure, before we defaulted them. And then you have to have proof that you sent them a default, and you have proof of service that they're in default before you go and enforce your security interest. So once the other party's in default, you can perfect your security interest, which may include if in the original settlement offer or notice or what security agreement, if it's understood that by them going into default, you can file a lien, you can release a lien, you can enforce certain rights, then it's okay. But you have to also have proof that you served them with the notice of default. If several days went by and they didn't respond or contact you and protest to why they're not in default, God forbid, maybe they did respond and send a payment. Maybe they did respond and release a lien. Maybe they did respond and do something, and you're just crisscrossing in the mail, and you have to give them time to respond and let you know. So if they've habitually not responded, if they've habitually not performed, then you can perfect your security interest. Now you could the company can repossess your car. Now the company can levy your wages. Now the company can put a lien on your house. Now the company can do all these things and not be liable, or have a high degree of sufficiency of them being confident and sure that they're not going to get a multi-million-dollar lawsuit over repossessing your car. That's an easy example to use. Or levying your bank account, right? If they levy your bank account and you miss making a payment on something, and then something lapses and you get your cable canceled, and your favorite TV show is on. I mean, that's kind of a less serious example, but you could see the ricochet effect of levying someone's account. If it was done unlawfully, you're developing this huge claim. So the IRS, that's why the IRS in their process of investigating, inquiring, and sending you notices, send it from multiple different offices. Now I want to ask, I don't have this on top of my head for you, but I have an assumption. When they were sending notices over the last several months, years, whatever, did they send notices from multiple different locations?
Yes.
Okay. Same thing for me, same thing for everyone. Okay? So that's what they're doing, is they're getting multiple witnesses, so that if anyone ever tries to bring a multi-million-dollar claim against the IRS, hey, you levied my account without, I never got any notices from you demanding that I perform and file my taxes. They can say, well, we've got 4 different offices that sent you notices, and they all have in their minute entry books that they keep, they have certificates of non-response. I don't know if they call it a certificate of non-response necessarily, but they have Like you know how a notary has a notary journal, and every time the notary looks at your ID and then notarizes your signing a document in front of them, they write in their notary journal. They have like a little journal. Have you seen that?
Yep.
Yeah, so they keep a record. Anyone who's listening to this that's been to the bank and has gotten a document notarized, they pull out their notary journal, and they actually, if you use your driver's license, they actually write your driver's license ID number on there, and they put all the information down, the date, the time, the location. Boom. Now and they did it with their pen, because now there's forensic evidence. Typewriters, forensic evidence. Printing stuff out of an inkjet computer printer, not so good forensic evidence. So you can actually have a forensic person predate and find out when something was typed in on a typewriter or something was written on the on the paper, and you will recognize your own hand. You can have the forensic person say, yeah, this is this person's handwriting, and they can with a shadow of a doubt prove this was this notary's handwriting. He did write this, the date and time, in their journal. So there you go. That's sufficient, irrefutable evidence. So keeping records and doing administrative processes, okay, so the IRS does it, so we have to learn to do it as well. Now the problem with this is once you're in default, once any party is in default, the other party has a right to perfect their interest until you've cured the default. And there also may be terms where you can't cure the default. Like, for example, there's in mortgage situations, there's what's called a redemption period, and some states it's 90 days, and some states it's 6 months, and some provinces in Canada, it's different. So if you've gone into default, you can cure it by making the full payment. Like, if you're late on your payments, all you gotta do is catch up on the late payments. But if you go into default, now they can demand that you make the entire payment in full on the mortgage. So there's different terms. Once you've crossed over to that default status, they also may have the right to say, no, we don't want your payment. We're just going to take your car. We're just going to take your house. Now, there are certain foreclosure laws in the states that protect homeowners and consumers, and federal laws and things. So when it comes to people's homes, there are mandatory redemption periods. But when you're dealing with a private contract that is more like private, between me and you, between you and the private contract you created with the IRS, between these other private contracts that the government doesn't have much of an interest in, protecting the public like it does with, because there's all these foreclosure things and there's a lot of fraud happening. So the government comes in and says, well, the states and the governments come in and say, mandatory redemption period. So people have 6 months to cure their fault, and you have to have due process and before you foreclose on them and so forth. So point I'm trying to get at is if you've gone into default with the IRS, the stakes get the stakes get raised a little higher, and it's going to be more difficult to, it's easier to cure your fault. Like, take for example in a mortgage. Okay, you've been 1, 2, 3 months behind your mortgage. It's easy to make that 2 months of payments in bulk and then go back to being current. And they may not even put anything negative on your credit report. They may not send you a notice of default. They may not do anything to try to start to foreclose on you. But once you've gone into default, the terms change where they might be able to say, well, send us the entire balance now. So same thing with the IRS, is that if they were just in the beginning sending you notices, hey, we have no record that you filed taxes, are you going to? And you got it from one office, maybe 2 offices, but there's really, there's not a lot happening. You could just file at that point earlier on in the game, and you would cure your fault. But if you waited too long, where they're like, listen, we've already sent this guy, 7 notices over the last such and such amount of time. We also sent him a demand. We sent him this. We sent him notice of intent. Like a lot of people, they sent notice of intent to levy. And now you're finally filing and doing something about it. You might be getting to the point of, like, the IRS doesn't necessarily send you notice of default. So, but you got to realize that once they're, like, later on in the game, it's more difficult to fix. However, there's ways to fix it. So all I'm saying is to the people who might be going over this, deal with the issue as early as possible before you go into default, and it's a lot easier. Whether you're dealing with a mortgage, whether you're dealing with your car, whether you're dealing with tax, whether you're dealing with anything. So anyway, now that I get that out of the way, I just wanted to put that out there for people. Now, if you did, see, in your case, you sent something to them and it got to them, like a day or two after or a day or two after it got to one of the IRS offices, at some other office, they already were preparing to file a lien on your home. So the two things crisscrossed. One office didn't communicate with the other office. You didn't give notice to that other office that filed the lien that you had sent and filed the taxes and sent a tender to this other office. So it's easy to see how things have crisscrossed and people aren't communicating here. And they were already preparing to put the lien on, and there's just a formality. Okay, they put it on 2 days later after you sent the mailing and it was delivered at some other office. So it's an easily forgivable situation where you guys just crisscrossed and missed each other. So in that case, after you've already got a lien, what's on the screen here is instructions on how to request a certificate of release of federal tax lien. This is probably the easiest. I've seen this work. It doesn't work that easily every single time, but this is the first plan of action because this is with the least amount of resistance, and this is the appropriate way that they want the lien. They actually have in their statutes and their publications in the IRS code how a lien is to be released. So if you assert that you paid the tax, this is how you release the lien. I'm going to read it with you, and then we can stop and go over anything, and you could take notes as far as the phone number to call, the form to fill out. But I'm going to let you ask any questions because I've been rambling. Otherwise, we'll just read it.
I do have one question.
Yeah.
It goes back to the date of when it's submitted. So, for example, if I had called and negotiated a specific date with the IRS on when I would have a response or have a payment to them, if it's in the mail, so for example, I'll just make a number. If I chose the 21st, and I actually mailed off via registered mail the 18th of the month, and they didn't receive it until the 28th because the registered mail took so long for them to get it. I missed the 21st deadline to that office, but I also sent it to a different office, as you had said. So does that mean that because I have a registered mail certificate showing that I actually had it in the mail and before the date, that it was in process and that I had actually met my obligation, or is it that am I in trouble because I missed actually physically having it in their office on that date?
I mean, you can assert that you paid them before they had a right to file a lien, or you can assert that you paid them after, whatever's accurate. It's not going to release. You're not getting any special. I don't think you're getting any special brownie points for it. As long as the lien is released, there's no. You know what I mean? Like there's no. Like what does it matter?
Yeah, I'm with you there. I just didn't know if it made a difference from a.
No, because listen, once they put a tax lien on, tax liens can be released. So, as long as it gets released,
we don't care.
It doesn't really matter if you sent them the payment before, and you can say, oh, you guys mistakenly filed the lien, please release it, and they say, okay, sure. Or if you sent the payment after they filed the lien and they had the right to do so at that time, and then they investigate the case and they say, okay, well, we did receive a payment, so now we have to release the lien. Either way, you release the lien. So, does that answer?
Yep, thank you.
Okay. Alright. Instructions on how to request a certificate of release of federal tax lien. Section 6325A of the Internal Revenue Code directs us to release a federal tax lien after a liability becomes fully paid or legally unenforceable. We also must release a lien when we accept a bond for payment of the tax. Pretty interesting, huh? What do you think about that? That it actually says that in there. Hey, John Doe, did you hear me?
No, I agree. I used the bond, so this is perfect for me. I'm just wondering, I got a call to make sure that they actually accepted it.
Yeah, I mean, they're like you can meet with the IRS at the local office and sign a bond with them, but they're expecting that you're going to make payments, and cut them a check, cut them a normal check with, backed by Federal Reserve banking system, and pay them every month, or have an automatic deduct. They're gonna want to set up some sort of agreement with you, or you explain their situation to you, and hey, I'm out of work, and this and that, and whatever. As long as you sign a bond to them, and the cool thing about that is, yeah, they can monetize those bonds too. They don't really need to collect, but everyone likes to double dip. Everyone likes to double dip and get their cake and eat it too. So what they're talking about is even if you didn't know anything about set-offs, releasing a lien is very easy. You just call the IRS, let them communicate with them as a debtor, and you can get the lien released that way. So that's another thing, is if these processes wind up, because it doesn't work 100% of the time, people have different difficulties with it, and we're trying to report on the most effective ways with the least amount of resistance. But if all else fails, pretend you're a debtor. Go to local IRS office, make an appointment with the agent that's on your case. Usually there's an agent that's assigned to your case in your local district, and meet with them and say, hey, listen, let's work with each other, let's help each other. I know you want something, I want something. All I want is for this, levy to be released, or this lien to be released, or whatever. This is my situation. This is my income. This is my situation. And they will make you an offer, and they'll want you to sign a bond, and then they'll release the lien. So it's not special. You don't have to be doing extraordinary stuff to get the lien release. You just got to sign an agreement with them to pay them back over time.
Okay.
But let's not jump to that yet, because you might be able to just get them to accept this set-off bond, and then the entire thing is set off. And if they release it, then you're pretty much good to go, and you got your cake and you're eating it too, right?
Mm-hmm.
So if we have not released a lien within 30 days, you can ask for a certificate of federal tax lien. Yeah, nowhere in here does it say set-off bonds are not allowed. It just says a bond.
That's true.
But this is just a manual. This is not the IRS code. The IRS code determines what the law is, and the court rulings determine the interpretation of the code. This is just a shorthand for lay people. So what it says in here is basically going to be accurate, but anybody who's looking at like when the Franchise Tax Board in California sends out a summary for lay people, very dumbed down, how to fill out the forms or whatever, or the IRS forms, when the instructions on the IRS form are not the law. The instructions on the IRS form, like on a W-4 or 1099 or whatever, they're not the law. They're just a summarized for lay people version. But you actually got to read the code and then look at the interpretations, the definitions in the code, and look at the court, the appellate court and the Supreme Court, if it went their interpretations of the code and its definitions and the rulings, in order to really determine the actual law. So that's just a distinction that I think a lot of people will get, just a side note that people will get, and you will get value from being aware of. So although I'm pointing out it says we'll accept the bond for payment of tax, you got to really read the statute and see, and then look at the appellate court cases and say, well, what kinds of bonds? Has there ever been a case where a type of bond was accepted, wasn't accepted? Do they have to actually make payments on the bond, or can they just send a bond and sign it and then never make any other payments? You see what I'm saying? So that's just a side note that I want to just mention. But it says, if we have not released the lien within 30 days, you can ask for a certificate of release of federal tax lien. So, unfortunately, there's a little bit of a waiting period here with this. Same thing with the levies. The levy process is a little different, but it's the same thing. They have forms that you can fill out. Requesting a copy of the certificate. If you have paid the tax you owed and have not received a copy of the certificate of release of federal tax lien, you may call 1-800 blah 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 913-6050 to check on the status of the release. If you prefer to write, see page 2 for the address to which your request should be mailed or faxed. The certificate you receive will not show the official recording information. The certificate you receive will not show the official recording information. For a copy of the recorded certificate, you must contact the recording office where the certificate of release of federal tax lien was filed. Okay, which would be like probably at your county. Requesting a certificate of release. Request for certificate of release of federal tax lien must be in writing. These should be mailed to IRS Attention Advisory Group Manager. Use publication 4235 Collection Advisory Group addresses to determine where to mail your request. Send your written request with any required documents to the appropriate address. Okay, so here's the meat and potatoes. Your request must contain the following information: the date of your request, the name and address of the taxpayer, one copy of each notice of federal tax lien you want released. Okay, so just include a copy of that. Why the lien should be released. All right, so that's the thing people might need some help on is how and if they should explain that or what they should do with that. And then a telephone number, the best time for us to call you should we need additional information. Okay. I would, if they do call you about it and are asking you questions about it, because obviously it's a little bit different from the ordinary, I would play the role of the taxpayer and just be like, my tax was paid by, like it depends on if the names are exactly the same or whatever, but you can either play the role of the accommodation party authorized representative, or you could play the role of the taxpayer. And just, if you're playing the role of the debtor, your mindset is someone else paid my tax. Did you see it? Someone else paid my tax. Whatever. And it's gonna be a little it's gonna be a little sketchy because the name, if the name is the same, and that's why sometimes we have one person do a set-off bond for someone else's account, and then like for example, me and my friends, my just so it's easier, it's like if I pay the taxes for my friend Bob and Bob pays the taxes for me, now if they ever call me to question me about it, I could say, hey, listen, Bob paid my taxes. Don't you have the documents? I filed the tax form, but Bob included a payment with it. What is it? You saying that Bob's payment is not sufficient? So it's just a little extra little tactic. We can do role playing and so forth in case they call later, but it's just something to keep in mind that if they're putting a phone number, there's a chance that they might call you to question and ask you about it to see if you really know what you were doing, and if your story is straight, then I think it'll go through. And anyways, it's about playing the role of the creditor versus playing the role of the debtor, and if you do play the role of the debtor, then it's just like, well, this was paid already, so on and so forth. If you have paid the tax, enclose a copy of any of the following with your request: an Internal Revenue receipt, well, you don't have that; a canceled check, where you don't have that; a record of payment by electronic funds transfer, we don't have that; 4, any other acceptable proof of payment. Okay, so they're asking for any of the following, so all you need is one of these. So any other acceptable proof of payment leaves it open. So there you go, proof of payment. So that means your administrative process up until this point. Your administrative process up until this point, including the affidavit of non-response. We may need to research your account to confirm you no longer have a liability. Okay, great. That's exactly what we want them to do, right? We will provide a release once we have done so. If you have an immediate or urgent need for a certificate of federal tax lien, visit or telephone your local IRS office. A list of local offices may be found on the IRS website. Be prepared to show proof of payment. I am not sure whether it's more effective to let them take their time and do it, or whether to go to a local office. I probably would rather not go to the local office about it. Let them deal with it on the back end and do their research. So to do their research, They may have to discuss it with their supervisors and the people that actually are in the know. You know what I mean?
Mm-hmm.
So I would say probably let it, give them the 30 days and so forth. You can pay any unpaid tax with a certified check, cashier's check, or postal or bank money order to request an immediate issuance of the certificate of release. For other forms of payment, the certificate of release will be issued within 30 days of the liability being satisfied. Okay, so for other forms of payment, the bond, the certificate of release will be issued within 30 days of liability being satisfied. So that's basically it. I found this, you find this form just by Googling release IRS lien, and it comes right up. And then it gives you centralized lien operations addresses and contact numbers to request payoff or other general information. Include a copy of the certificate of release, send a written request and required documentation, centralized lien operations, PO box, blah blah blah. Telephone number outside the U.S. So there you go. So this is the first route of action. Which is pretty simple. So, I mean, I guess if you're requesting it, you may want to put up a cover letter and say, request, you may want to title the document, request for release of lien. And then just put some language in there. This is a formal request to release, the lien for so and so forth, so and so forth. Please see the attached documentation, which includes, a copy of the notice of federal tax lien and the record and acceptance of payment to Internal Revenue Service, and then attach an exhibit. Go that route.
Do you also conditionally accept the notice of lien?
Yeah. Yeah, you can do that. I would conditionally accept all notices that have ever been sent. I conditionally accept your offer upon proof of claim that the tax obligations were not paid as of such and such date. Thank you so much for your cooperation. Boom. Very simple. But there's
You include the original letter or the original document that came from them in the original email showing you with your name as part of the package when you send it in?
What's that?
So the notice of lien that comes to you, you save that envelope, you keep the original there, make a copy of it, and when you mail this back in, the information that they're requesting here, you include that as well? Is that correct?
I would take the originals in the original envelope and send those back and conditionally accept those to the office that it came from.
Okay.
Yeah, I mean, they're all, notice to agent is notice to principal. You can return something from one address to another address, and it should all go on their computers. But I like, hey, if Austin, Texas sent me something, I like sending it back to Austin, Texas. So I just make a copy or scan it in for my records to see what I got and what I returned, and then I return the original. So there's, if there's any
Anything on the original, correct?
Huh?
You don't write anything on the original?
No.
Yeah.
Nope. I'm just
So when
returning
I'm sending that, so that's basically, what if I understood you correctly, you're sending out two mailings. One back to the original office that sent you the notice of lien as a notice of conditionally accepting it.
Uh-huh.
And you're including that with this setup when you're sending back for this form that we're using right here for the request for a certificate of release to the location here. So
Yeah, you could also, yeah. I mean, your private administrative process, you got your record. You could also include the fact that you conditionally accepted the notice of lien, I mean, that can't hurt you. I think that that's appropriate.
Okay.
I don't see that's necessary to send copy when you're requesting this release. I don't see it's necessary to send copies of, if you conditionally accepted 5 notices, 5 separate notices from different places. I don't think it's necessary to make copies of all that and include it in here with the release, because again, they're going to take 30 days to research it and look in all the different computer systems from all the different offices about you. And as long as those local offices have in their computer, and that's why the nunc-pro-tunc date is so important, because they're going to have to type into their computer the date that your letter was dated. So they're going to say, yeah, we sent this guy a notice that he didn't file his taxes, and then they're going to enter in their computer, 4 months later, that you responded 4 months ago into their computer. So it's going to look like you counteroffered like immediately. Nunc-pro-tunc. Now for then. Make sense?
That makes sense. Thank you.
Okay, I'll stop the video. I think we covered everything. Hold on.